Good afternoon, everyone. BC Richfield here, coming to you live from London. It's just gone a couple of minutes past midday here, making it a few minutes past 1100 UTC. Massive shout out to everybody joining the stream live today, as well as everybody that watches this on recording. How are we doing today, ladies and gents? Macro picture looks pretty good. FOMC later on today, GDP print in the US tomorrow. Sail through those, and risk looks good, in my opinion, for continuation, another leg up. So it is our alt request Wednesday, so please do let me know in the chat, in the comment, if you would like any particular tickers taken care of. We already had requests today for Bitcoin, Ethereum, Solana, an update on vertical AI and Credify as well. If there are any others that you would like me to take a look at, please just pop it in the chat. Maybe something like Sui. I know there's been a lot of news around that recently. Please do let me know. Be more than happy to take a look for you. Now, for those of you who might be new to the channel, I'm a price action trader. I do work on swings. My speciality is intraday trading. I am head of trading for the Burb Nest, which is Crypto Burb's magnificent community, mainly based on Discord through the website. Do some bits and pieces on social media as well. I used to work for proprietary funds, used to work over in Germany for a major fund over there. So yeah, been involved in the crypto game now for 6 going on 7 years. Well, in trading seriously in crypto probably for about, well, 2017, 2018, I think, but got really kind of full degen when Crypto Burb kindly asked me to come and join the Burb Nest, which was about 4 years ago. So I like just sharing my thoughts. None of this is financial advice. It's purely how I see and trade the markets, and hopefully that's something that is of interest to you guys as well. So please do let me know, like I say, in the chat. Just drop a comment if there's anything you'd like me to take a look at, any ticker. Can be traditional markets as well. I am a legacy market trader, as we would call it, but for me it's indices, FX. So if you've got any interest on that, we are going to cover that as we take a little bit of a look at the news as well. So I hate it here. Hello, mate. Erica, our lovely friend. How are you doing, guys? Great to have you all with us. We've got, I don't know why I always do this. It's such a British thing, but I've got a little bit of a weather update for everyone. It is indifferent here in London today. The sun is shining bright, but at the same time, the clouds coming over. I took Yuki out for a walk this morning, which was a mixture of just muggy, overcast nastiness and little breaks of sun, but summer trying its very best to get through here. So yeah, that's it. Let's hope the sunshine reflects the moods of the markets. Now, today could be a little bit of a benign day due to the fact that we have FOMC later on today. Okay, I think for what it's worth, so you guys are aware of the kind of bigger picture view, the markets are incredibly good at pricing in what their expectations from these type meetings. Now, this isn't a rate setting decision, that's already been done. This is Powell taking the mic and answering questions that are put to him, right? So the key thing that we watch for when this takes place is we are looking for either a hawkish or a dovish tone from Powell. That basically akin to hawkish is like bearish, dovish is like bullish. So for example, the market has into the high 90% now priced in the fact that we are going to see 2 further rate cuts in the US this year. This is very, very important. It was 3, it's been downgraded. The US debt has been downgraded as well. That was a little bit of a nothing burger event because it was just the last of Moody's, I believe, the last of the majors to do that. However, what it does mean is that if Powell was to come out today and say something like, we expect no more rate cuts this year, that would be very bad for cryptocurrency. It would be very bad for risk assets like the S&P 500, like the NASDAQ, which you'll see me review here via the ES and NQ mini contracts respectively, which is what I trade. However, if he comes out, and that would be hawkish from Powell, or for example, they're not happy with GDP, is they're not seeing the economic growth, they don't think that the foundations are stable for further growth, they're worried about rising inflation, versus him coming out and say they think inflation is very much under control, they're getting down to their target of 2%, GDP is on its way down to, or I'm not sure this is really going to happen, but GDP is on its way up. It's about 50% of where they want it to be, but it's not, the prints aren't particularly bad. So just before we kind of lock into this, let me just give you guys a little bit of context on this. I just do it for literally, I reckon I can run through this in about 1 minute with you. All right. It is very, very important to keep an eye on these things. Now, what we've got here is the news. Now, this is all of the news. You can filter it just by red folder, which is typically, which is obviously the most high impact news. So we can see here we're Wednesday the 28th, and the red folder news in the US here sticks out like a sore thumb. Okay, we have FOMC meeting minutes. That's not until 7 p.m. my time, which is 6 p.m. or 1800 UTC. So we have a long way to run through the day. However, we do have a Fed speaker in the form of Kashkari, who is speaking. Actually, I think that's already taken place. This is an interesting one, actually, because then we're moving through here. The Richmond Manufacturing Index, don't expect that to have a massive impact. So we could just see a slightly benign market heading into the day. Now, the key thing for me, and we discussed this with the team yesterday, is the preliminary GDP print quarter on quarter. This is very, very important, and this takes place tomorrow at 1:30 p.m. UTC. This is very, very important because, 0.3 was the previous print, minus 0.3. Sorry, they've kept it the same with this as well. Now, I think this is what I'm looking at to be potentially a positive impact here, because I think the market is probably pricing in a little bit worse. The early stage data hasn't looked as strong as they'd expect. So I think if we get the 0.3 or better print, 0.2, 0.1 or well, I mean, I don't expect it, but if it was in the positive zone, this could be a major catalyst for risk assets. Okay, so that's what we're looking at there. We have a smattering of FOM speakers as well this week. Again, unless there's something incredibly left field there, I think we are going to be okay on that front. So back to the charts. Where does this leave us? Well, Bitcoin, we can see after all these beautiful up weeks, and you look at this 1, 2, 3, 4, 5, 6, 7 weeks of consecutive upside. That's after obviously we had 1, 2, 3, 4, 5, 6 of complete down. All right, small corrective move. Then we continued, right? One of the key things that I look for on a chart, if I'm expecting reversal or continuation, or if price has found a level, I like to use highs and lows where the key liquidity is resting. Ideally, the most obvious ones. You'll hear me use the term clear and obvious quite a lot, but also gaps. All right, so if you want to know more about gaps, I've got courses out there. I've got a lot of free YouTube material as well that you can find on the Birdnest website, or just reach out and I'd be happy to kind of either run through it with you if you're over with us at the Nest, or if not, direct you to some materials that we have on the website. CRV chart, Erica, I absolutely can, with pleasure. So this is a gap. It's a bullish gap. It's a 3-candle pattern. Candle 1, candle 2, candle 3. It's the gap between the high of the wick of candle 1 and the low of the wick, or body in this case, of candle 3. If there's no gap, like we see here, 1, 2, 3, the wicks overlap and we've got a fill here from the body, we have efficient price delivery. So the market likes to rebalance these gaps. Now, I'm not saying that we're coming all the way down for this, but let's just take a look at the last major expansion we had. What happened? Price had a nice expansion here, consolidation, shut down to refill the inefficiencies. Now, there's a few different ways you can look at this as well. Depends on how you use your Fibonacci's, whether you're somebody that likes to take the origin of the move, which I would consider down here, because I would say this is lower high, lower low, lower high, lower low. Yeah. Then we had a lower high, higher low, and this is where we had the structural breakthrough here. So this for me is the origin of this move. If we take this out, high to low, include it, well, because we didn't have this price action here at the time, if we imagine we were in and around here, if we put this onto our Fibonacci, we can see how price came back down to rebalance the gap under the 50%. All right. Now, there's a lot of different reasons that price does this. Most of all, in my opinion, anyway, there's a few different things, especially with Fibonacci's, right? The 50%, the golden pocket are really, really powerful magnets for price. There's a little bit of a self-fulfilling prophecy element to this, all right? That if so many people consider the same things, then often that becomes a self-fulfilling prophecy. But more than that, when you're looking to code bots, when you're looking to build algorithms and stuff like that, you have to give them, if for want of a better term, quite a binary instruction base. You need to remove nuance. So things like Fibonacci's, where you can anchor to key highs and lows because you can code bots, you can have indicators that show you where these swing highs and lows are. taking that from the low to the high of a move is something that bots can understand. It's obviously something algorithms can understand as well. Same with highs, lows, and gaps. With those elements, and I mean algorithms really controlling trading in the market, for me, it makes a lot of sense. So what does that mean? Well, it means that if we take a look at this current, what I would call an expansion leg, it's set a new high, it's taken liquidity from the lows, so this I would consider an expansion leg. Then we can see this gap down here. Do I expect price to come down to here? Well, I'll tell you the eventuality or the scenario where I would expect price to do this, right? We've got a lot of confidence down here. We're below the 50%. We've got the 0.66 and 618, which is the golden pocket here, is certainly how I look at it. Now, I am not for a second saying I expect a flush down to here. But if we get the news catalyst align, if we get that kind of drop, if we get that sort of attack on risk by maybe, poor GDP print, or we have, particularly hawkish Fed, then this for me is a real area of interest. And you see like this move here. Now, I'm not expecting bearish continuation after it, but I really could imagine a flush down. I think we stop in and around this gap, by the way. I think 50% is just too far. But it's always important to have plans for both scenarios, right? So looking at that, we've established a key point here. Now, I'm not saying the price is going to get down. In fact, when we look on the lower time frames, I really, really don't think that it will. But if we do start to break down, if we do see those negative news catalysts for risk assets, then I think we could see a flush down to here. I think overall the market conditions are still very, very buoyant. They're very bullish. So I think this would catch the bid aggressively, and we would then see this be the platform that would lead us to new higher prices. But we could also see the same here. The truth is we just don't know, especially in the current news environment with the tariffs, with Trump. We have to retain an open mind. It doesn't mean I'm bearish. Of course I'm not bearish. Look at the upside we've seen for all these consecutive weeks. However, you have to be pragmatic as well. So as we look at this here, you can see the momentum in the candle, beautiful momentum candle, kind of doji in here, large momentum candle. Jojo, hello, mate. Great to see you, my friend. Really old friend of the Nest and a wonderful trader, especially with traditional markets. Great to have you here, Jojo. And then we see a large expansion. Then this nice bullish pin bar. I like this candle. It tells me that there's more upside, or the likelihood is there's more upside, because we've got literally no nose on it. It's just a beautiful like hammer candle. You'll hear it called as well. This is obviously a doji candle. This normally shows indecision. If we close the week inside this, then we bring into play a weekly inside bar pattern. If you want to know more about that pattern, you can find that on my Twitter profile. All right. But either way, it's just showing a little bit of indecision, a little bit of caution from the market. And we can see that this week, by this kind of almost spinning top, I think it's called like a very, very, very small doji at the moment, is kind of reflecting that indecision. So there's not really tons to talk about beyond that, in truth, right? There's this gap that's definitely of interest here on the weekly. Just move these back a little bit, otherwise they'll be huge on the lower time frames. All right, and we're just going to mark these up. Yo, Chad XBT, how are we doing, my brother? For those of you that don't know, Chad is a friend of mine, friend of the Nest, and just a wonderful trader in his own right. Great to have you here, Chad. Cop for Bitcoin is to the upside. Yeah, I mean, we could look at things like the M2 as well and bits and pieces. There's a lot of signs that this is looking bullish. I think just from a pragmatic point of view, as I look at this weekly chart, I think, is it unrealistic to expect a pullback here? Have we retested the 100K area? No, on the latter. But I do think that if we, look, we failing to displace above this high over here, I think we could see a move lower. However, I need proof for that, right? So what do I want to know? Well, I want to know what's capping the market. I want to know where the key pivot points are, where's my support, where's my resistance, and what's containing price. What does price look like it's doing? Now, for me, this gap here, this daily gap, is absolutely what's containing price at the moment. I really don't feel like I can go short within this gap. I could short into these lows because ultimately the gap has been rebalanced. But look at what the gap has done. Price has drawn down into this, held it perfectly, continue to hold it, wicking below. It's just not able to get down below this, right? Yeah, we do have this order block down here as well, but my interest is much more in the gaps, unless we have a high probability order block, which is an order block whereby liquidity is taken from a key higher time frame level, price displaces, and then, let me just give you an example. It's a little bit easier, isn't it? So price comes into an area like this, we take liquidity, right? We thrust down, so we have the downward thrusting candles here, yeah? So the down candle that's left here, when price expands above it, I expect a strong reaction here, right? an OBD to show it's an order block daily. This is just how I do it, right? Many ways to skin a cat, which is a very weird saying we have here in England. But we've got the down close candle here. Yeah, this is where sellers were caught offside. Large expansion above. The return to here allows those sellers that were offside here to mitigate, close out their short positions, get on side with the trend, which looks likely to expand. The other things that I look for, especially at these key pivot points, are these gap inversions, right? So that was a bearish gap. Yeah, here, like we talked about. Let me just zoom in for you guys. Price closes above it here, yeah? So there's an expectation then for this area to hold. Now, ultimately, what price did is flush back down to retest the order block and then close above. So it was a little bit messier than we would like. But ultimately, this then becomes a key area of interest because once we close above it, we expect it to offer support. It doesn't, right? It actually flushes down. We find support at the order block, which we ideally want to see retested anyway. So from here, we're bullish. From here, we don't expect to be bearish. But then when we're back above, we have the beautiful confirmation come in. That price is showing strength again, right? So sometimes when you're caught offside the first move, don't despair. Stick to your higher time frame plan. When you get the signal to step back in, then obviously you can catch these beautiful moves to the upside. So that's what a high probability order block is, in my experience, or not my experience, in my experience in the way that I trade. So here on the daily, really, really simple. If we're marking out our key liquidity, this candle hasn't closed yet, so this high and low isn't intact or validated. Sorry, so we have this. And we have this, which represent the high and low of the liquidity pools here. I would favor a move down to flush out the lows, followed by an expanding move higher. But again, it's not really what I fancy. It's what the charts can show us. So based on those scenarios, I now need to set conditions. And if I'm using the 4 hour as a higher time frame or as a framing time frame, then what do I want to see? Well, at the moment, price is kind of just a little bit sideways, right? We had this expansion higher, consolidation, price sold off. Now it's just kind of chopping around. It's not even in a very clean range, to be honest. But remember what I said. Just look at the chart and tell you what really stands out. All right. A couple of things stand out for me here. One is this gap. I'll do this a little bit darker so it stands out, right? H4 to symbolize that it's a 4 hour. Now, as we see this in here, we can see we had a nice expansion for price. It really failed to kind of capitalize on that. But remember this line here, which I'll just make thicker, is our prior all-time high, right? So that there is a very, very key level. We saw we got the deviation here. Price came underneath, retested the area, sold off, deviation, sell off, deviation. Now, what I look for, if we get these secondary deviations, because if we deviate this, then I'm expecting a flush to liquidity, which is down here. This gap continues to hold, then ultimately what we've done here is deviate, come back down, failed to take the key liquidity target, shown strength, but again, sellers have been in control here. But now price is coming driving back down to this level here. We're looking to hold this gap. And what I like at the moment is we have a little bit of a catalyst here in the fact that we've taken this 4 hour low. So what could I use for a little bit more confirmation here? Well, if I wanted a little bit more, I would actively be looking for longs here, by the way. If I wanted a little bit more, then I can look at this bearish gap here. And we're going to just pop this one in red so it stands out for everybody that's maybe not, hasn't covered gaps too much, right? So these are caused by basically inefficiency in the market, order pairing. Yeah, so think of it this way, so much volume stepped into the market here, so much buying power. That doesn't mean buyers. That's an easy way to think of it in your head. It could be a small number of buyers with a huge amount of capital, right? But either way, buyers took such control here that you got the slippage on the way up. Yeah, so you get these gaps. The market likes to rebalance these gaps to be efficient. And this is where we look to get back on side, in this case with long trades. So if we close below this 4 hour gap that's supporting price, then quite simply, I'm expecting price to flush out to these lows, all right? If I want to take longs from in here, I think that's perfectly viable. Higher high, higher low, higher high. At the moment, I have to assume this is setting a higher low and that this thing is going to be the move that takes us up to a new all-time high. If I want more confirmation on that, I could wait for a 4 hour close above this gap. What would that do? Well, that would turn that from a bearish gap, resistance, into support. And all we would look for then is for price to draw back to this area and then give us the long moves higher, all right? Ultimately, if we're wrong and we start to break down, we're wrong. A third rejection here would almost be like a triple drive into a high, and then the chance of a breakdown becomes even higher. In terms of what I would look for, either on the 15-minute or the hourly as well, I would look for that key kind of displacement move. This is a really, really good example here. Let me just turn off Asia's range for a minute. Okay, this is a really, really good example, right? So look at what we got. Price comes down. What is this? This is our 4-hour gap within daily gap. Both of these we expect to offer bullish support, right? So as we take into this, what do we get? We get a structural shift when we take out this higher, yeah? We see price comes down, takes out this local low. I would have preferred it to take this low, but that's a very, very abnormal wick. So you can also look for the 50% of this, right? But I do like to see a liquidity sweep of some kind, even if it's just local. We get the liquidity sweep, and this is what I mean by displacement and expansion. Look at the way we leave this gap here. If I'm on the 15-minute chart, I can measure down to the 50% of this gap, right? I can put my stops underneath the order block here because this is the down thrust candle that led to price breaking structure and moving higher. And then I have key liquidity targets. I can take some off here, right? I've not really got anything to stop it here. It's just this collection of beautiful highs, yeah? All that just have, think of these as having just money symbols above them, right? And as price accelerates, it ding, 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 taking these out. And then we can see, you know, how it failed to displace really above these. All right, but really, really nice trade here. Obviously, you'd extend it out to here, but you take profit along the way. So this is what I want to see in respect to this way, right? So we haven't quite had that yet. Look, you can see how price is kind of coming down into a very small gap here. Nothing significant, yeah? So what I'd like to see on here, if we are going to take off from this point, I thought this might be it coming through London lunch into New York today, but I think it's a little bit doubtful with it being FOMC, right? It's just a flush to here, nice big move higher, yeah? If I'm going to take it aggressively on this, then I'm not going to interest myself with this. I'm saying this is the liquidity sweep that sets us higher. Right, and up we go. Let me just move that across a little bit so it's not in our way. And then what I'd want to see in here is a nice bullish gap. And we're away. We know where we're wrong. We've got targets to the upside. Hopefully this is obviously a little bit higher here. We make a secondary move. As long as the risk to reward is good, they're the kind of swing positions that I would be looking to take. And this will be applicable to all of the coins and tokens that we review today. All right, so let me just have a little look. Yeah, Chad, I'm good. Thank you, brother. Craigie boy, Craig Parker, how are we doing? Good to see you on here. Mac01, how are you? Jojo, yeah, maybe Nvidia earnings tomorrow will push us higher. That's a really good question here. I think people are underplaying this. I think Nvidia are going to come in strong with earnings. And with that, I think, you know, that is going to rip the S&P 500, the NASDAQ, which that is obviously part of the index. And with that, typically, if we see prosperity in risk markets like that, the money normally flows through into Bitcoin and crypto. You're a legend, Chad. Always good to have you here, brother. Nit, how are you doing, my friend? And Whack, great to see you all. Everybody really flooding in, almost 2,000 live now. That's what we love to see. What a blessing. So plan on BTC is really simple here. We're just consolidating this range. If we just zoom out again, I know there's a few more scribbles on the chart now than there was, right? But I think we're holding this. I think if we flush this, great position for longs. If we close below this, then I think we probably purge down a little bit lower, maybe to retest this area again. Ultimately, while we hold this, I think we move higher. If we start to invalidate these levels of support or where we expect liquidity, and let's not forget this as well. Let's not forget that we've come off of a higher low, yeah? Sorry, a higher high to the low. We've now set a lower high. If we break this low, right, then we've got a change in market structure, and we are actually here on a daily scale stepping in to bearish market structure. Now, some people would consider that you would need to take this low or this low. I'm looking at this more in terms of the microstructure, but this is a valid low for me. It's flanked by two higher lows. I think if we come down below this with any momentum, I'd be looking to short off of this inversion down to this weekly gap. But let's not get too ahead of ourselves. We don't have that scenario just yet. So let's dive into Ethereum, shall we? We're going to go on our crypto charts. You can always check these. These don't change. We leave all of our TA on here for as far back as I can really remember. To be honest, doing these shows for the last kind of probably 3.5 to 4 years. Burnside, you're very welcome, mate. You're always in there with the wonderful comments. You do appreciate you all listening to me just rattle on as I do. So as we look at this, we were looking at this, right? Remember, this is a wedge pattern or a bull flag. I was telling you a story about when I was talking in Dubai with OKX at their event out for Token 2049 and came across a wonderful trader, Asian trader called Mr. Million. His record of winning trading competitions is the best I've ever seen. And his speech that he gave, and I such an admirer of his, because, you know, it's definitely not his native language, English. And he just soldiered on stage and was incredibly humble, very, very bright, wonderful to learn from. And he was just saying, in these market conditions, right, you look for the pump, you wait for the consolidation, and then you play the breakout. Now, this was an aggressive breakout here, but this is also a daily chart. If you move this down onto a lower time frame, you would be in. Craigie boy, hello, mate. I will get round to that in a moment, my friend. But we can see back here what we were looking for. Why? Because of this inversion, just as we looked at on Bitcoin. Price broke above here, held the inversion. This is the consolidation we expect to lead higher, and it did. As we were saying, we were targeting this level here. We got a strong close above. Again, watching how price reacts at these levels is really, really key. So here, for example, when we can see we came into this order block, it's not a high or a low, right? But you can see immediately price gets above. Then as soon as it starts to get back outside of these areas, typically telling you it's looking for liquidity a little bit lower. So with ETH, we're kind of stuck here. We did have the breakout from this. Now, I really am not the boy to speak to about these. I would go to Axel Kaibar, or I would go to Mr. Million, who did this amazing presentation about how he just waits for these impulse breaks out and then just longs the retest of these falling wedges, or bull flags, as we look at. And I always find the very best traders make things seem very, very simple. Ultimately, it's down to the conviction that you have in your system, and also having that mindset to be able to do it. Now, and by the way, if you want to study pattern trading, then Axel Kaibar, a wonderful CMT qualified technician, is probably the best in the world at pattern trading, has the most information, data, everything. You ask him any pattern, anything, he can tell you how often, how relevant it is, how often it breaks out to the upside, the downside, the probability, everything. Just a really, really, really incredible person to learn from. Anyway, we got the breakout, we got the close, we were looking for the retest this area, and we got the expansion higher. I was expecting price to take out this higher, we didn't get it. Not a problem. Again, price, like most things in life, don't often do what I want them to do, but as with life, you have to have a plan both ways, right? Otherwise, you can get caught short. So what does this look like? We just did this consolidation, right, on the daily. Is there anything that stands out to me here? Absolutely not. This is capping the downside, right? That low, so that's fine. We can see the wicks down into this area. We don't need to leave that on the charts. It's not overly relevant. We don't have any key gaps in this area, right? We don't have any of those kind of, you know, if we pop to a weekly click quickly, this is the reason we expected a little bit of resistance here, because we had this untested order block. Remember, like I said to you, this isn't a high probability one. It hasn't swept liquidity, all right, like this one did. These up close candles here that took liquidity from this high, when price closed below this here, look at how aggressive the sell-off was, right? In the same vein, and unfortunately we didn't quite get it, if we look down here, and apologies for the amount of crap on the chart, unfortunately on some of these, I have been a little bit lackadaisical and not I haven't updated them as well as I should have done into groups. So look, this order block breakout here, this is a high probability order block here on the weekly, down close candles consecutive, price breaks above. Okay, no good to us here because the breakout was so aggressive, but it does show you continuation into the next key liquidity pool, which unfortunately was very, very close. You could be very aggressive about it and take this one. I wouldn't. Personally, I don't really take order blocks that are dojis, and this for me is still within the region, or within the realm of these two candles. All right. So just to give it an idea, does the weekly tell us any more? No, but we do have a target here. So we have to assume there's liquidity resting above here, because the smart people that were short here, this is probably where their stop loss rests. You know, you need to sometimes get past the whole idea in your head of, oh, okay, actually, well, why would they still be leaving their capital there? Why is this? Why that? Just look for key liquidity pools, right? Trust me, the market will do the rest for you, as long as you're disciplined and you're following a data-tested strategy that's proven over time. All right, big caveat there for you. So up close candle, look how well this is respected. Price sells off. Up close candle, price now rejecting here. So the fact that we're driving into this area again is beautiful. Any of my private mentoring students who might, most of them are doing wonderful things in their lives at the moment. Five of them, they're actually professional traders, right? But they will all tell you of the crap stories that I tell, these analogies that I give. And there's one that's the idea of how price is engaging with the level and what you want to see. And I relate it to a pan of boiling water, right? If the water is tepid, yeah, then you can put your hand in the water like this, right? and not really much happens. Yeah. So let's imagine this is the water here, and you put your hand in, it's like, it's okay. Water's a little bit warm, but actually it's quite nice. What you then need to wait for in that situation is a catalyst or a sign that price is ready to move, right? So like this, for example, one of my favorites, yeah, as I explained to you before, look, bearish gap, rejection, 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 strong expansion, inverts the gap, we expect price to move. However, when you see a reaction like this, so let's imagine our pool of water is up here now, yeah, and you touch the water, it's boiling hot, and you're like, Christ, oh, you have to pull your hand out very quickly. You see that sharp reaction there, yeah? The same with this here, a little bit muted because we had the two doji candles here, but you kind of put your hand in, you're like, no, actually, sod it, that is too hot. And then you pull it out quite quickly. Well, what that tells me is look how price didn't return to this area, and look how price didn't return to this area when it shot away. Why? Because the water was too hot, and it means that you're now looking for safety away from the hot water. So water's too hot down here, so you're looking for safety away from the hot water. What's the difference with this? We haven't seen that sharp V-shaped rejection here. We've seen price drive into this level. It's kind of sticking there. Why would you keep your hand in the hot water if you weren't willing to go a little bit further? That's the kind of way that I'm looking at it here as well. So let's drop down. I know I've kind of done that a bit arse about face, as we would say, a little bit back to front, starting on the daily and going to the weekly. A couple of questions in the chat that I want to take a look at as well. But just to finish off here, I don't really have any major plays here. I'm feeling bullish. Price is back above this level. We've got key liquidity targets to the upside. I'm certainly more bullish than I am bearish. So I'm going to look at the 4 hour to provide my conditions for me, and the 4 hour just looks beautiful. Why? Because there's the massive gap. Look, when you look at these things, look at what is clear and obvious. Yeah, if you're having to feel like you need about 5 pairs of spectacles on to look into this and go, where the hell is the gap that I'm interested in? Yeah. Now, I'm not being a twat about this. This will come with time, right? But look at this. That's a clear and obvious gap, right? It rejected price here. We saw bang. See how it cut through it like a knife through butter, right? Quick, no respect. Sellers should be stepping in there to sell this off. That's where they can take control, right? But they were just, the balls just overpowered them easily in 2 candles. So now I'm expecting this area to hold. I have an inversion. Do I have anything else that I can go on? Of course I do. I have a joined bullish gaps here as well. I'm just going to do this in green so it overlays, and I'm going to put it to there to just satisfy my OCD, right? So what have we got? We've got bullish inversion of a bearish gap. This area should offer support anytime we're in this area, unless we close below it. And we have a joined 4 hour bullish gaps here as well. This is the area I'm looking to get long from. It's really, really, really as simple as that. Right, so let me just take a look now. Craigie Boy asked a question up here. BC, you tend to build positions before TP1, or do you TP1 and then add a little bit more to build the position? Interesting. So just for example, yeah, let's just say that I took a long position here, yeah, and return to this gap. It stops under the order block, right? What I would typically do is identify a key level, in this case, the order block, 1.97R. If I'm swing trading, that would probably be my first take profit. I would then look left across the chart here, yeah, and I would say, okay, we have relative equal highs, this high here and this high here, that's take profit too. And I would typically have this as a major take profit, and then I would leave, say, around about a 20% runner, just in case price really, really rockets. What I tend to do, Craig, is in terms of building positions, is I'm not somebody that really tends to add around this level, and that I tend to secure my stops around target 1, yeah. So move my stop loss to entry, de-risk the bid. If we come back down, in this case, yeah, then I would look for the same conditions to enter again. What my expectations would be, and I can obviously be wrong, but if I'm wrong here, I've got a 20% runner, that thing moons. I can look at other assets, strong assets that I'm looking to follow along and kind of, you know, put my capital there. What I would do here, though, is my expectation would be for price to do something like this. Yeah, blow this off, yeah, come back down a little bit, and from here, I can then look for the same play we're kind of looking at here, inversions and the support of bullish gaps, to then go into a secondary trade. Or maybe, you know, it's the case that we hold this up a little bit more and we purge down a little bit lower. This isn't a problem, remember, because this here, people would be like, yeah, but you've lost this low. Yeah, but when you're really bullish, especially, you want to see a market structure break, not a shift. This is a shift because you've got a higher low and a higher high. This is your first lower low. So really, for a break, you would need a lower high and then to come down below this low here. And then this ultimately is the key point of resistance you would look to trade to the downside. Okay, so obviously we're a long way from having that at the moment. So hopefully that answers your question, Craig. But I know some traders do really, really well with kind of pyramiding into positions. I do that kind of approach much more with DCAing into any investment really. I had the levels that I'm looking to buy again, which in fact, actually, once we start to spin through this now, I'll show you obviously what we've been covering with things like Vert AI, Credi, bits and pieces like that. Solana as well is another one which we'll just look at now actually. Been adding Solana, and I'm going to show you exactly why, and we've been discussing this on each show. This was the area I wanted to buy Solana, so I bought Solana. We came back down below this and I said, okay, I'm going to be a buyer down at this low. We recovered this level, so I said, fine, I'm not going to buy any more here because I've already added up. Now, the key thing for me here is how we're reacting at these levels, and not on the weekly here. I'm going to show you this on the daily, but look at this level here, this high, how we closed above it, price consolidates, then we really popped. I'm going to show you this on the daily, which is the kind of key point that we're arguing with at the moment, for want of a better term. But we do have a lovely skinny bearish gap here as well to remember on the weekly scale, right? Again, on a weekly scale, the minute we close a bullish candle above this, I really think that this is go time for Sol, definitely up to this gap here. And then it's basically, we're looking at, the higher. So that's kind of how I would approach this. Now, what I would do, obviously, for more context here, is we're looking at this on a daily scale. Yes, I bought down here, so I was expecting to buy this a little bit lower. When we recovered this, I was absolutely fine. I said on the show, as I explained before, if we flip this area here, and then this weekly level, if we hold above this, we had this daily gap as the target, I added more here as well, right? So I've brought my average price down by adding, as I did here. I was very, very clear about this circle here. We break down from this level here, we had a bit of a deviation of this higher, but we did. I added more here. I added more here again, on this low, flush of this low, which happened here, which was beginning of April. Then we had this deviation. I was expecting to maybe be able to buy a little bit lower. We recovered this. Beautiful recovery scenario, just as we've looked at previously. Look at the inversion, how the bodies respect that, come up, set that order block here, the high probability order block there, and then price is away. So again, if I wanted to kind of add into this now, if we get that kind of pullback to this area here, I'd probably add a little bit of more Solana here as well. Now, I know that this is bringing my average buying price up. However, in bull market conditions, I've seen exactly how this can melt faces, and the Solana ecosystem is still one of the most heavily engaged for projects launching on it. It's one of the cheapest for fees, etc. So I really do think we can see some big upside here on Solana. So hopefully that answers your question, mate, in that perspective as well, because you got to remember, when you're increasing your kind of positioning here, if you were doing this as a swing trade, then really what you're doing is you're kind of eating away at your profit as you go up, and you're very highly exposed to any reversal then to really take you out, and you walk away with a lot less. I'm somebody that's happy to book profit little and often, especially as an intraday trader. That's my specialty. But yeah, I think having your targets, sticking to your plan, but always taking profit, right? I'm a very, very, very firm believer in that. There'll be people that will walk away off of a single bull run a lot richer than me, because they will hold things for a lot longer and they will have probably more conviction in the projects. But over time, believe me, traders like me win out quite often, because you're taking just little nibbles of the market consistently. You're not tied to bull markets, you're not tied to bear markets. And that's not an arrogant thing. It's just the nature of, intraday trading, where people are just taking little snipes at things, just consistently building over time. Other people will go in with trend trading systems. One's not better than the other, believe you and me. But for me, it just kind of suits the way that I trade. So really, we can see the key point of resistance here. We can see the key point of support. So price is kind of just ranging in and around in here at the moment. So if we're looking at this, we can see it quite clearly. Look, price is it is taking the highs and it is setting higher lows. So we can see we've kind of got a little trend line situation going on here. Those of you that know me or my analysis will know that I'm not a magician when it comes to trend lines, but actually that's pretty good. Tone Vase always taught me either anchor it to the wicks and respect the wicks, or if you're going to go for the bodies, just make sure you're not basically taking the piss, which means that, if you want to draw a line of best fit, don't just think, I just go through all the bodies here. It has to respect something, right? I'm looking for absorption. I'm looking for deviations, right? So for me, this is really good, because now I can see the price deviates below. The wicks tell me that the buyer stepped in. Wicks tell me the buyer stepped in. Wicks tell me the buyer stepped in. Is this wick now telling me the buyers have stepped in, right? Because what I'd love to see here is this kind of finish as a doji candle, and then us have a nice large expansion candle here, which would set a kind of morning star type pattern. Right, and they're very, very powerful trading patterns. They have over a 70% success rate. Again, you would need to dig deeper into that in terms of timeframes, but here's an example of one here. Probably purists would say this is maybe a little bit too much of a pin bar candle, but I would take this large expansion candle down, doji candle, and then the candle going the other way, the bullish candle in this case, closes above the 50% of this candle. Yeah, the extra confirmation for this, by the way, would be, of course, the inversion. Price closes above, we create this bullish gap, which is this green box, react at that, and then we just respect the black candles all the way up until we don't. And then we get trapped underneath them and price sells off. So anyway, long story short, I think this at the moment is, I mean, look, it's setting higher lows. It's taking liquidity from the highs, coming down to the lows, and it's failing to take these out. This is either providing a great liquidity pool to flush down into, but I do think we get the setups here that we can take some intraday longs here back up into this area. This has been rebalanced to here as well, which we need to remember. But ultimately, I want to see the close above this area to give us some more upside here on Solana. So let me just take a very quick look at the questions through here. Usually I got to. So look, did answer my question. Thank you. Well done, Erica. Awesome. John Billcliffe, text green, game over. No, I don't think so. Not unless we get a major turn in the market. If you look at capital flow, you look at interest rates, you look at inflation, GDP, etc., everything's pointing that the market has more upside. You know, you probably, if you're looking for real panic, you probably want to take, not panic, but kind of something on the contrary, is to look at kind of the 30-year treasury yield and stuff like that. That's where people are concerning themselves with the long end of the yield curve. But, you know, at the moment, look, these aren't the market conditions actually when trying to deploy your brain too aggressively is really pays. Believe me, this market rewards the bold and the stupid, like most bull markets do. Not suggesting that you take that approach, but just saying. So as we look at this here, again, look at the clear and obvious conditions. What am I looking at here? There's actually two. On the 4 hour, this bearish gap is doing a great job of containing price, and the bullish gap below is doing a really good job of holding it. So I think a close below this and we flush out these lows, a close above this, and I think we make a move on this high. I would be cautious in here, right? It's just an area that we've obviously seen a lot of rejection, but ultimately price, even when rejecting, has taken a clean high within that. See, this one took this high, this move took this high. So if we do get this break above here, I think we could look to run this high. Whether we close above it or not on the higher time frame is another question. So let's take a look next. What did I get asked for here? Vertical AI. Yeah, so okay, so invested in this a little while ago. Actually, we did cover this previously, didn't we? Sorry. This is down today. I mean, you know, real kind of risk asset here. What key levels? I think this is one of interest, this high here. Expansion above it, and we can just see that this managed to cap the market when we had the strong close below. This one here was taken from a daily, so we're going to look at that in a little bit more detail in a moment. Let me just make a very quick note of this. So, perfect. So yeah, again, like I've been saying, I really like this. I was very vocal about being a buyer down here, being a buyer here. Was saying that where I would look to add more if I wasn't already involved in this is when we kind of flip this level. Now we're going to get a lot more clarity on this, as well as all of our old TA here on the daily chart. All right, so this was a really key pivot point for me. I think it's held it quite well. These areas are never perfect, right? Just trying to look, or I'm trying to look for a region. First of all, what I do is try and highlight a key low that I think is kind of capping the market. So it would be that for me. Why? Because that low here, you know, bodies were really struggling to get below this. And when they did close below, look at that beautiful retest and sell off. Resistance closed above, and then it kind of holds. But support and resistance is very rarely lines, right? You can see the significance that this one has back here as well. So look to expand it to a box. For me, this has held quite well. We were looking at this balanced price range that is merely a bullish gap with a bearish gap closed through it, or a bearish gap with a bullish gap closed through it. We expect this to offer strong support. Ultimately, with the bearish gap here, when we close above this, look what a great job the BPR has done here at containing price. So the messaging was this. You can see by the arrow we left in here, this would have been the middle of May. We were looking for price to come back down, retest this order block here. Yeah, this is where the buyers were before, or when sellers were caught offside, and now they can mitigate. And as long as this holds the BPR and the support level, we're looking to push higher. So again, this did end up being quite a good place to buy. Would have expected, we saw this really big move up. We saw that absolute flush back down on the Friday, which was a little bit news correlated, I believe, was potentially the Trump news. yeah, with the escalation on tariffs on Europe, I think was what did that. But now price is looking really strong and recovering really well. So the technicals have held up really well on this. Let's just take a look at the 4 hour as well. What our plan was here. Look, this was the move that got us back into this. I was saying this is such a great place to buy this if you weren't in down lower. And I know of a fair few people that did actually. Again, this area is now holding nicely. Look at the large expansions. Look at the big gaps in the moves down. Yeah. And then look where you see these big gaps on the way up. Yeah, now I believe this was more news driven than anything else. The fact that we've held this level is brilliant. So when I'm looking to trade trending assets, and obviously it's trending on the 4 hour, what I'm looking for is for the bearish candles, consecutive or singular, to just support price higher. That's why you see these drawn in on the higher time frame. So for extra confirmation here, yeah, let's close above this level here, which is 0.27310099. All right, we're holding a bullish gap. Again, where's the key area that's holding this? And I don't mind adjoining gaps in this respect. Typically, you want to see single gaps, but on the 4 hour here, we've got this beautiful bullish gap holding price. This is a great area, in my opinion, to look for longs, especially if you want to build positions intraday into longer term swings. And yeah, if we lose this area, I think we probably want to be looking at the expansion leg higher, looking for that kind of 50% retrace or the golden pocket. This order block here and the gap sit beautifully in this area. Flush down to here, I think this is a great place to buy. Personally, that's what I would be looking at anyway to build swing positions. Next one, I was asked for this on Discord, was Credit. Start on the weekly, see how this one's been getting on. Again, I've had a bag of this for a while. This was added here, bought here again. Just look, if you just kind of move this back. Oh no, maybe I've just actually done this. Yeah, no way it goes back that old. But just look what a nice pivot this is, right? Or support resistance. What happens here? Price loses this area. Look at the upside wicks. This is containing price. Price closes above with this candle, large expansion, right? So the buyer stepped in here. Now, back to this area here, we can see this is the consolidation, right? That supported price higher. That's what we like. We just almost tagged it down here as well. And I did say some people include the wicks in here. I prefer the bodies always have SC's words ringing in mind when I moved across. And I did a lot of FX stuff with SC, not with him. I learned a lot from him a number of years ago when we were on MetaTrader. And yeah, look, just looking at these kind of areas, where are these key consolidations, right? The bodies, as SC would say, tell you what actually happened. That's the trading, the volume in that. The wicks tell you what was attempted. So when you see these long upside wicks here, it's showing you that price is trying to get up, but the sellers are just starting to take over, right? And then if you just look at the transition here, yeah, also these kind of, a little bit at the sign of a little bit of a liquid market and also ranging conditions. But look what happens. Upside wicks are winning the battle, no question. Upside wick, winning, winning, winning. Yeah, you want to see a wick of at least some kind of significance, right? So you've got doji here, 1,000 counts, so that's winning. So you've got all of the power is being controlled by the sellers here. Another big upside wick, yeah, another big upside wick. Then you get this doji here, right? And then you're kind of saying, okay, the doji kind of equidistant on this side. Then you get a large body expansion candle. After you've had a bullish engulfing, you can start to see here the way that price is starting to formulate. Large downside wick. Key thing with that wick is it takes liquidity from these, right? Then look how the downside wicks really start to take over. Now, I know, yes, you've kind of missed the major part of the expansion here, but even if you don't allow for that one, you look at the bodies, look at how the larger bodies in the bullish candles start to appear, and these large upside wicks here showing you the sellers are in control start to disappear. All right, so the candles can always tell you a lot, and at the moment I really like the volume in these, right? Because if we look at the candles here on Credit on a weekly scale, you can see, yes, a little bit of an upside wick here. We got that consolidation, the doji candle within creating an inside bar pattern showing us that it's consolidating. But what is it doing? It's consolidating above support. This was a key area. Price wicked into this, closed below it, resistance, 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 back above it, support, support, support. This is the key thing when we're looking at that. All right, David Pepe, yeah, we'll wait some time for Pepe for you. I hate it here, no worries, mate. Can we pass all-time high? Yeah, I think so. I think we're going to have a massive run on risk assets personally, unless we get some kind of major change, in a macroeconomic environment or something geopolitically. There's obviously a lot of tensions across the world, unfortunately, because people are just fucking megalomaniac idiots. As Bill Hicks once said, I believe, why would humanity want to put itself together to achieve magnificent things when it can just spend its time infighting and dick measuring? But, the nature of people, I suppose, it is what it is. I can't control it, so I try not to think about it too much, but I do monitor the impact that it obviously has on the markets. But without any kind of, don't like throwing this term around, but kind of sort of black swan event, I think ultimately the markets are looking for more upside at the moment. The capital's certainly there, the conditions are certainly there. FOMC and the GDP print are going to tell us a lot over the next couple of days. So as long as those things hold up, then I do expect more upside. And the all-time high really isn't that far away, right? So anyway, just to continue on here with with Credit. It's why I'm a holder of this, right? Bought it back here before, bought it here again. Again, I said, and you can look back on the previous streams, this is the area, once we close above this is a good area to add some more if it was me, all right? I'm not saying you should, but do look into the projects, right? Don't just sit here, and the amount of projects that reach out to me, that reach out to us at TBN, literally hundreds every week. We only ever work with and vet the best project, and there will be 4 or 5 people working around the clock doing due diligence, background checks, finance checks, team checks, community updates, everything into these, because you have to make sure everything's right with these projects. You can have a really good idea, but you can either have a shaky team, a shaky community, all of that. You can look at. Yeah, no, it's right. It is Credit. It's still Credit. Don't you worry. I hate it here. It will. We will get on to Pepe in a little bit for you. So look, holding this area here. This was an interesting area. I was looking for this to hold originally. So when we closed below this here, we changed our plan to watching this area hold, this bullish gap. We swept into this, held it beautifully. Now, ultimately, we're just looking for expansion. If we look at this, which now isn't valid for me because look, bearish gap, close above, close below again. However, you can see here that now we're back above that. This, is an area that we're looking at here for support. All right. So, yeah, I mean, if you want to get a more aggressive play now that we've closed above that, let's look at the conditions for what's really holding price. This, for me, is the clear and obvious area on the 4-hour to look for some potential buyers. Okay, now I'll tell you for why. We've now got a balanced price range through here. To do that a bit darker to stand out, I think. And then we've got that within a higher time frame balanced price range here. We've had that beautiful expansion. We're in bullish market structure, setting higher highs and higher lows. Nice expansion here. Draw back down to this area here. And again, as we showed on, say, the 15-minute, look for those, expansion plays where you set a low, sweep that low, big expansion above it, and then look to see if you get some low time frame positions in the gap there, or take a 15-minute trade. You know where you're wrong. You're wrong below the low. If you do get a close below that, then you can be pretty confident the price is then seeking out liquidity below this low and probably back in this area here. So yeah, again, really, really positive with that. Credit bags are paying, as are the CRV. Let's have a look for our friend Erica. Interesting. And look at that potential power of 3 that we were discussing previously. I don't think that we got it, but again, that's why we use these same charts. We keep all the TA on there. We haven't really done much on CRV, but one of the main reasons that I really like this is because of this, right? We got this inversion on a weekly scale, which is super, super important in my opinion. This was capping the market here, here, here. It really stuttered through this. When we got the close above, expect this area to go from resistance to offering support. And we're seeing that really, really, really kind of play out now. Just mark that up. So it's there for next week as well. Moving to a daily. Let's have a look here. This was the key. I think this is a 4-hour one, right? But we were looking for this to be the sweep to the offside and get the expansion. We didn't quite get that. But again, we're going to look back at that in a moment. What I really like here is this. This is no longer relevant, so we can delete that, right? That was the order block. We were looking to support price. It failed. We closed below the 50% of this, meaning it's invalidated. We then look for price to do what we were discussing before. We want to see a low swept, as we've got here. Then we're looking for that high probability order block to be set, which we got here. We didn't retest this, right? But what we did do is we inverted this gap, yeah, making this purple. Then we closed back above it, right? So now that's not, we had this, yeah, bullish gap failed and closed below, right? As we're going the inversion. Now it's back above. We expect this area to hold. Yeah, you look at this almost like a deviation of this gap. Yeah, because look, when we close below like we did here, the expectation is that price is going to run out to the next liquidity. All right. And yeah, so we're holding this area. I think this looks good on CRV here, to be honest. Let's just pop this on the 4 hour quickly and see how that power of 3 failed for us. So we had this here because this is like a good consolidation. Yeah. So this is the offside sweep. We just inverted this gap and then created a bullish gap within here as well. I'll just do this in a bright green so it stands out. So this for me was a really good area to hold. Ultimately, what happened? We closed below it, right? So again, broken record time. What does it become? It becomes an inversion gap. It goes from support to resistance. Resistance retest, sells off, back in the area, sells off again, all right? So, you know, we're just following the same principles each time, all right? So here we go. Price comes down. We've expanded up. As long as we're holding this area here, again, looking for that clear and obvious play. I don't really see one immediately here on CRV in truth. The gap's maybe a little bit small here, but we've got this H4 bearish gap. Write this in. All right, so again, seeing price close above this, I think would be a bullish sign. And then I really like the play into here. If I wanted to take an even safer play, I would say that this bearish gap here is really what's containing price. Yeah, so we've got rejection here, close above this. I think this thing absolutely flies. But really, from a local perspective, I'd like to see a close above this. And then I think intraday wise, we're going to at least chase down these highs. And you can look to build an intraday position, maybe build that out into a swing position at a later stage. So yeah, I think ultimately that looks really good. I will drop down to say an hourly if I don't think there's anything particularly clear, but there's nothing extra here on an hourly, just a load more gaps kind of leaning down here. So I think the 4 hour is absolutely our cleanest read on this. And I think that looks good. Close above that. And I think we really kind of make a move on these. If we wanted to be super conservative, that would close above this gap over here. And then let's get on to Pepe for our friend I hate it here, shall we? Let's have a look. Wow, looks like there's been lots of fun on the Pepe chart, right? So, okay, again, look, this was a really key area here, and Razun and I covered this recently on the live show, right? Which is definitely shouldn't be that blue. Hang on, green. This is the consolidation here. Yeah. The down close candles that led to this pump. This area then held and provided an incredible amount of upside. So when we come back down to this area, I bought again here, I added again here, right? And I said before, look, this low here, if we sweep this and we get the recovery, then I think this thing can rip. Pepe just loves to melt faces in these massive like weekly candles or daily candles as well. This is an area that we need to get over next, right? We'd highlighted this. This is the bearish gap, right? Price smashed into this, but couldn't quite invert it. We're now just chilling out here, which we can see by the doji candles. We were expecting a move a little bit lower down into this weekly bullish gap, all right, which we haven't yet got. Price again showing a lot of strength in a very bearish area. So we've got the level that we've got interest in here, right? We want to see it above that. Whilst price is kind of still meandering around in here, the daily doesn't really tell me much. I'd like to either see a flush of this low and then for price to recover, or maybe back down into this gap, which we haven't visited yet. However, nothing seems overly clear, right? So I'm going to dig this down a little bit further to the 4 hour. And on the 4 hour, I've got a really nice, clear and obvious set of gaps here. From which I'm happy to look for long positions. Now, there's a caveat to that. When I say I'm happy to look for long positions, I'm not just going to long any 15-minute setup in here. I want to wait for lows to be swept, yeah? And actually, there's one at the moment, all right? So I think it's a little bit tricky today because of FOMC and because of a lot of positioning that's going to be taking place going into the GDP print tomorrow. Absolutely not what I meant to press. There we go. So we've had the sweep here now. So if we get that recovery, I think this could be the catalyst that at least leads to the short-term pump to take out price within here. Again, if I wanted to be super conservative about this, this for me is the key gap that's containing price at the moment. This is the bearish gap on the H4. Close above this, and I think Pepe absolutely ripped. Green candle lover, awesome. We can see looking back where the good barriers are. How do you tell in real time if I should buy it? I mean, there's a lot of different ways to skin a cat, my friend. What I would suggest is that you want to find out a way that kind of, you know, something that speaks to you. For me personally, if I was looking to do this on a higher time frame, as we kind of covered before, I would look for assets. In fact, my good friend Razun and wonderful member of our trading team, and I talk about this a lot. So if I get this, awesome. This is just a 200-day simple moving average. All right. Now, Raz, who's a wonderful swing trader, uses a lot of volume profiling and that as well, right? But he's always said in here, and I agree with him, we look for these original consolidations, especially anything around when the 200 MA is recaptured. Yeah. And if the asset is trading above the 200 period moving average, yeah, then that's a really good point to look for those key catalysts. So look what happened here when we lost it. Yeah, structure breakdown here, price sells off. When we've regained it here, we came back above it very quickly. As long as we hold above that, it's great to start looking for those consolidations like these ones here and start to build positions. If price then breaks down further, bearing in mind I would be doing this on spot, I wouldn't be doing this with any leverage. You don't get rich quick in this game, I can promise you that. It's a massive misnomer. People that get wealthy in this game do it over time. They do it with a strategic plan. They stick to that plan. They plan their trade and they always trade their plan. All right. So a great way to do it is if prices in assets over its 200 period daily moving average, then this is showing strength, right? So we can look at this to pump higher. You can look at other elements like Solana, Ethereum as well to see how they're getting on to give you a proxy for that. Or as I do. I'm a great believer in this, looking at these original consolidations. So if you just bought here, bought here, bought here, bought here, bought here, you can see that's really key. If you're late to these moves, don't ape in at the top, right? I would then suggest waiting for these consolidations, yeah, and either waiting for a breakout of that and a retest to position yourself. Either hold it if you do get into drawdown and price comes back down, and then add again at these original consolidations, which would be something like this. The black candles here that led to the big pump, or the original candles down here that did the same. That was the same with this one. So if we move that across here, that's why we were buyers here. If we extrapolate that across here, that's why we were buyers here. So looking for those. When prices run really hot, either find a corresponding asset that has good fundamentals that's following it and look to deploy capital into that. And if not, green candle lover, then wait for these consolidations. Yeah. Look at what's capping the upside and the downside. Ideally wait for a run of the lows, but then when you get those breakouts, this is the area that you can then look to hold. And then you just want to start taking some profits. I think this is a good area actually, rather than that one, because you've got equal highs across there. All right. So hopefully that helps a little bit. Look, I run a trading team for a paid trading community. I'm very, very proud of that because we produce a lot of professional traders and we help a lot of people make a lot of money every single day. And not just that, become better traders, look and understand ways they can read the market better, whether it's fundamental analysis, algorithmic trading systems, price action trading, positioning, etc. But I'm somebody that paid for my education, right? So I'm deeply not against that. There are a lot of good free resources out there as well. If you don't have the capacity to join a group like ours, what I would say is any group you join, do a lot of research, speak to members, look at what resources they've got, look at how active they are. But ultimately, it's a bit of a cheat code learning from professional traders that do this all the time because you get access to their systems, their mindset, and you basically forego a lot of time, but you do need to work incredibly hard. So that's where I am on Pepe, and we've got a couple of minutes until, we're a few minutes over what was scheduled. So I think that ties us up quite nicely. Again, please do remember later on today, in about 6 hours from now, we do have the FOMC minutes. That's when Powell is going to take the mic. Again, in terms of where I am with this, I don't expect it to be a major event unless there are some key downgrades or upgrades, as in, are there going to be more cuts? Are there going to be less cuts? The market is priced in at 2, which has been downgraded from 3. And then tomorrow for the GDP, which is going to be really, really key. And for the rest of you, we'll be live with the trading session this afternoon for members at 1:15. So please do come in and be prepared for that. We are going to look at crypto and we are going to look at indices. Just to finish off the show, a very quick look here at the indices charts as well, which is like the NASDAQ, the S&P 500. We can see here on the NASDAQ, we have some pretty good conditions as it sits above the 200 period moving average. You have to forgive the chart annotations from something I was just doing at a presentation yesterday, but basically, and there's even more of them on this one as well. So what we can see here is price holding this gap. We're above the 200 period moving average. This is looking really strong. Equal highs, which are above, which are at 22,672, which also includes the all-time high. I think this is the draw on price. While we stay prosperous with risk markets like this, I think it's a very, very good thing for cryptocurrency. If we look at ES, and again, just ignore the annotations from the talks and bits and pieces, but look, holding this gap here, I mean, this is ultimately here a really, really good area, I think. As long as we hold this, we're still favouring bullish trades, which is what this green line means. We've actually, in fact, been bullish since this inversion and the retrace down here. But yeah, bullish risk assets, bullish the cryptocurrency markets as well. We just want to take a look down here. Also, we want to see a nice chilled out VIX down below 20. We see we had that little spike up through here. An elevated VIX just shows you that there's more people taking puts, which short positions basically on options against the S&P 500, which obviously means that the sentiment of the market is changing to either a period of covering for the longs that they've got in, or that it actually means that they're expecting the market to move a little bit the other way. The fact the VIX is down here is showing us good conditions for risk assets. The DXY is pretty mute at the moment. We can see that a long way down below its 200 period daily moving average, and also still holding down in this lower range. It's a little bit tricky with the dollar at the moment because there's many catalysts driving the DXY, which is just a basket of currencies weighted against the dollar, with a slightly, against the dollar, but slightly heavier weighted towards the euro. Yeah, so the reason is the US want a lower dollar at the moment. They want lower bond markets and bits and pieces, a little bit more complexity to it than that. But it just means that this isn't quite aligned as it is. When you have these correlated assets, they do slip in and out of correlation, so make sure you understand where you are with those. And gold is just obviously continuing to tear faces off, which Peter Schiff will be very, very happy about as he flies in his private jet with his family out to speak at a Bitcoin conference, which I think will be very, very interesting for people. Real shame with Peter, by the way, because what a magnificent mind, but just not willing to let go of the past. Yeah, but he does him, we do us. Good luck to Peter. He has been a magnificent trader over the years, but a real kind of anti-Bitcoiner. But we'll see how it plays out in the long run. All right, legends, thank you so much for being present today. Cypher! I didn't see you sneak in there, brother. For those of you who don't know, a guy that's just really caught the eye of not just me, but a lot of my trading team as well is this fine chap here, Cypher. So I'm always on the lookout for the most undervalued, high quality crypto and trading accounts, and this guy is so far up there. Please do give him a follow. All right, you've got the handle on the screen for you here as well. And he's just like my brother Just Pit, right? These guys, I don't know honestly how they don't have tens, hundreds of thousands of followers, right? But if you want to do yourself a real serious favor today, guys, all right, first of all, come and follow me, BC_Ridgefield. I do produce a lot of content, a lot of free stuff on there. But I would really say if you're going to do yourself two massive favors today, follow these guys, follow Cypher_1x and follow my bro, Just Pit 5. Just go and take a look at their Twitter accounts and tell me there's not tons of alpha on there every day. They're two massive grafters, amazing price action traders, and you can learn a lot from them, all right? So great little tip for you guys. I'm going to leave their names there in the comments for you as well. Do go and check them out, all right? And I'm going to catch you legends on Monday. For those of you on the live trading session, I'll see you in around about 6 minutes. Have a fantastic day, and I'll catch you guys around the nest.